Now let's move on to see what if the sale is below market terms. If the sale is below market terms, now suppose there is an example wherein the carrying amount of a building is 6 lakh. The fair value of the building $7,50,000. Sales price of the building is 7 lakh. Remaining useful life is 15 years. The company arranges to lease back the building for 1,20,000 per annum. For a period of 5 years. So this is the arrangement for the lease. Now in this situation, the sale is below market terms. Now it says that if the sale is below market terms, it is assumed that the difference is prepayment of lease. Prepayment of lease means the fair value of in the market is 750. The entity received only 7 lakh. The difference of 50,000 which it did not receive will be considered as a prepayment for the lease. The total payment they'll need to make is 120,000. So let me make it 100,000 per month per annum. Total payment they'll be making over a period of time is 100,000 per annum. This 50,000 will also be considered as part of the prepayment of the lease. Why would someone agree to it? Like when the fair value in the market is 750, why would someone agree to be sold at 7 lakh? Why? The carrying value of a building is 6 lakh when the fair value in the market is 750. If it is at normal fair value in the market and sale price are same, there is no problem. But why would someone agree to a lower amount in this scenario? Why would someone agree to a lower amount? If they consider it as a prepayment of lease, that first installment is gone. The first installment is 1 lakh. They may say that, okay, first installment is gone worth 50,000. We agree to. So this difference is considered as a prepayment of lease when there is a sale below market terms. How much is the gain on sale? Total gain on sale. Total gain on sale. Fair value is 750 minus 50,000 is the total. Sorry, gain on sale is 7 lakh Gain on sale will be in relation to the fair value. Since whether sale is at market term or below market term, we are considering it as a at market term or below market term or above market term. We are considering the sale at fair value. So when the sale is below market terms, we assume that there is a prepayment. But when the sale is above market term, we consider it as it is assumed as additional financing. What do I mean by this? If I take the same example, we calculate it, don't worry. If I take the same example, fair value of the building is 750,000 and sales price of the building is 800,000. Now, if you notice here, the sales price is above market term, above market price. In this example, the 7 lakh was below market price. Why would someone agree to sell at below market price and why would someone agree to sell at a higher market price? Can you tell me? Can you think about it? When carrying amount of a building is 6 lakh, fair value in the market is 750. If it is equivalent to market terms that we already discussed, but why would someone agree to pay lesser than in the market? If they agree to pay lesser than in the market, the other party will say, okay, we'll assume it as our first installment. Can this happen? Can the other party object to it that we wish to receive 7,50,000, but if you don't pay it, we'll consider it as our first installment payment? Can they do so? Does this make it fairer? If the other party says that you're not making us a payment of 50,000, we'll consider this as a payment towards present value of minimum lease payments. Can they say so? What do you think? Can they say so?
Yeah.
And if the other party demands higher payment than the market value, that the market value is 7,50,000, but on leasing, they say that we need 8 lakh. What will this extra 50,000 be considered?
This is the interest for the financing cost.
This additional 50,000 will be considered additional financing. Yeah. Though they are eligible to receive only 7,50,000, if they receive 8 lakh from the other party, this 50,000 is an additional financing being done. So this will be treated separately. This will not be treated as part of sale and purchase of this 7,50,000 combined to 6 lakh. 50,000 will be considered additional financing, treated separately.
And that should go under IFRS 9, I believe.
Yes, under IFRS 9. Treated here, but considered out of this 8 lakh. When we are trying to look at the fair value gain on sale, how much will be the gain on sale? How much will be the gain on sale in this example? Gain on sale, as I said, is always in relation to the fair value, because if I don't take it in relation to the fair value, I'm including this 50,000 as part of the total fair value or sales price. So I'm saying that sales price is actually 750, 50,000 is additional financing, and so I'll bring it back to fair value. The fair value of the building, I'll talk it in relation to the fair value. So fair value is 750, carrying amount is 6 lakh. So gain on sale will be 7,50,000. That is fair value minus carrying amount. Fair value minus carrying amount will be the gain. That is 7,50,000 minus 6 lakh. 1,50,000 is the gain. So do you understand? We'll do the calculation. If it is below market price, we'll assume it to be prepayment of lease. If it is above market price, we'll assume it to be additional financing. So what is the present value of these lease payments? 1,20,000, and if the rate of interest is, if I take the example from the book, if the interest rate implicit in the lease, interest rate implicit in the lease is 4.5%, can you tell me the present value of lease payments? The present value of lease payments, 1,20,000 per annum for a period of 5 years. We have received 8 lakh. Out of this receipt of 8 lakh, we agreed to pay 1,20,000. Now, when we agree to pay 1,20,000, we agree to pay for retaining the right as well as repayment of additional financing. Agree or not? That we are additionally financed. We not only agree to pay for retaining the right to use, but we are also agreed to pay repayment of this additional 50,000 which we have received. Agree or not? So on day 1, it will be cash account. Cash account debit 800,000. Credit disposal of asset which is 6 lakh. Right of use will retain. Gain on disposal transferred. Gain on rights transferred or disposal transferred, rights transferred. We can divide it into 2 components. Our liability of 50,000 discounted to present value over a period of 5 years. Additional financing, but our total repayment is happening in installment, whether we'll repay the right of use retained or whether we'll repay this 50,000 additionally. The total lease liability amount is same. Lease liability and additional financing. So lease liability plus additional financing, can I call it financial liability? Can I give this as one term? So this is a combination of 2, financial liability, which will be a combination of your lease liability payments over the term as well as financial liability. How much is that? How much will be the financial liability? And how much will be the lease liability? 1,20,000 being paid over a period of 5 years. If I calculate the present value, it will be a combination of your lease liability as well as additional financing. If I calculate it,
So 50,000 should be the finance liability.
yes, 50,000 will be that additional financing liability, and remaining balance of the total lease liability. So we are making a repayment of 1,20,000 over a period of 5 years. The interest rate implicit in the lease is 4.5%. So 1 divided by 1.045. 1.045, 1.045. If I calculate in today's terms, the repayment will be making over a period of time will be equivalent to total repayment will be 526,797. The total financial liability is equivalent to 526. But this is a combination of lease liability plus additional financing. So how much is the present value of lease liability? How much is the present value of lease liability? What is the present value of lease liability? That out of total value of 8 lakh, we were supposed to receive only 7,50,000. 50,000 is additional financing. Now, when we plan to receive this 700,000, we agree to make a payment of 120,000 per annum. But this 120,000 per annum also includes this additional financing of 50,000. So if I remove this additional 50,000 from the total present value today, will I get the present value of lease liability today? The present value of total liability is 526.97. 50,000 is the value of the amount which we did not receive. Can I say the difference is the present value of lease liability 526,797 minus 50,000 will give me the present value of lease liability? Agree or not? Hello? Why I need this? I need the present value of lease liability to know to calculate the right of use, retain and right transferred. I need this value. I cannot use this value of 526 because this is containing that additional financing. This is not towards retaining the right of use and retaining that gain. So the lease liability towards retaining the right of use is actually 476,797. Agree to this or it requires clarity? Hello? Manoj, Nitika, Panu, hope you agree to it. And this amount I'll need in comparison to fair value. Why do I need this? In comparison to fair value, I need to know the right of use retained. How much will be the right of use retained? How much will be the right of use retained? Carrying amount 600,000. Present value of lease liability 476,797.2 divided by fair value of the building, that is 750,000. 381,437 will be the value of right of use retained. What about the gain on right transferred? Gain on right transferred will be dependent on how much is the gain retained. Gain retained will be equivalent to total gain is 150,000 in the proportion of present value of lease liability, that is 476,797.2 divided by 7,50,000 is the fair value of the lease liability. Total gain retained is 95,359. So gain transferred is equivalent to 150,000 minus 95,359. So if I do debit plus equal credit, 1181. So total debits equal the credits. The total turns out to be equivalent to 6 lakh plus 526 plus 1181,473. The total of the debits $381 plus 800,000. Hope this is clear. So how we'll treat when the sale and lease back is equal to market terms. When sale and lease back is above market terms, we'll consider it as an additional financing. and we'll have to recalculate what is the present value of lease liability separately. And this present value of lease liability is the figure to be used for calculating the right of use and gain on rights transferred. So there's always be a confusion between, now what are the confusions at this point of time? The confusions which could have occurred at this point of time are relating to how much is the gain or, so two important points which you need to remember is gain on sale is on the basis of fair value or market terms. Right of use is in relation to present value of lease liability to be paid to retain this right. If there is any additional financing, we'll remove it as part of present value of lease liability to retain this right. Now in this case, it is opposite. Below market terms, what will be the present value of lease liability? Below market terms, it will be opposite of what we did now. Sale below market terms. What will be the gain on sale? Gain on sale will be equivalent to the sales price of the building is 7 lakh, but gain on sale is 750. This 50,000 is considered as 50,000 is assumed as the difference in prepayment of lease. So gain on sale turns out to be again 750,000 minus 600,000. Gain on sale is 150,000. This will need for knowing how much is the gain or right transferred. What about other entries? Cash account, debit, lease liability, disposal of asset, rights of use, gain on right transferred, so when we have an arrangement wherein we are selling at below market terms, why would anyone agree to sell at below market terms? Because the other party considers it as a prepayment of lease. So there is a fair value of the asset in the market for 7,50,000 and sales price is 7 lakh. This is below market terms, 50,000 less. This 50,000 less is considered as a prepayment of lease towards retaining the right of use. If the carrying amount on asset is 6 lakh and fair value of that building is 7,50,000, so the gain on sale will be considered to be 1,50,000 on this sale. And if the remaining useful life is 15 years and interest rate implicit in the lease for retaining the right of use for a period of 5 years, lease back the same building is 1 lakh per annum for a period of 5 years. So there'll be lease liability in the terms of 1 lakh per annum plus 50,000, which is considered as an prepayment of lease. So total will be the amount which is going to be paid over a period of 5 years plus 50,000 will be considered the total lease liability for retaining the right of use. Why I'm stressing on this point? Because we need this figure to calculate the right of use retained and to calculate the rights of gain transferred. Because the amount of lease liability is not just this 1 lakh being paid over a period of 5 years. The amount of total lease liability to be paid to get this right is 1 lakh over a period paid over a period of 5 years every year plus 50,000, which is considered as prepayment of lease, is to be added back to know the present value of lease liability to know the right of use retained. So if I look at the entries here, so we have received a cash of 7 lakh. We did not receive equivalent to the fair value in the market. Fair value in the market was 7,50,000, but we received only 7 lakh. Why we received 7 lakh? Because we received 50,000 less. 50,000 less, this we'll consider it as prepayment of the lease. So our total lease liability will be 1 lakh over a period of 5 years. So total lease liability, which will be 1 lakh over a period of 5 years, is the total of these amounts. Total of these amounts is equivalent to 95,238, 1 lakh paid after 1 year, plus 1 lakh after 2 years, plus 1 lakh after 3 years, plus 1 lakh after 4 years, and plus 1 lakh after 5th year is the amount yet to be paid. But the present value of total lease liability to retain the right is equal to 482 because we consider this 50,000 as prepayment of lease. This 50,000 is considered as prepayment of lease for the total right retained. So total right is retained for a payment of 482. It is not being retained for a payment of just 432. The total payment of 482 is helping us to retain the right. So this is the amount yet to be paid. So our lease liability yet to be paid is 432. So we credit 432,947 is yet to be paid. The asset disposed of is 6 lakh. We received 7 lakh cash. So in real terms, this would have been 750 cash received for a lease liability of 482. But that 50,000 of debit gets cancelled with 50,000 of credit because we consider it as prepayment of lease. But we'll not ignore this 50,000 while we are calculating the right of use retained. The right of use retained is in relation to right of use retained. For knowing the rights of use retained, we'll need the fair value, we'll need the lease liability for retaining this right, and we'll need the carrying amount. Fair value is 7,50,000. Lease liability for retaining this right is 482,497, and carrying amount is 6 lakh. If I use the fraction for right of use, now this is the fraction to be used, lease liability, total lease liability of 482 for a fair value of 750 is being paid. This is the fraction to be used for a carrying amount of 6 lakh. So right of use retained is 600,000 into 482,947.67 divided by 750,000 is the fair value. We get a value of 600,000 into 482,947.67 divided by 750,000. 386,358 is the value of right retained by agreeing to make a payment of 482 over the lease term, out of which 50,000 is considered as an advance repayment. 432 will be making over a period of time. We have been successfully retaining the right out of 6 lakh of carrying amount of 386,358. In same fashion, gain on right transferred. For gain on right transfer, we need to know how much is the gain retained. How do we get this gain retained? We get this gain retained by knowing the total gain, that is 1,50,000, in comparison to the same fraction, total lease liability, that is 482,947.67 divided by 7,50,000 is the fair value of the building. We get to know the total right retained. When we know the total right retained and when we know the total gain was 1,50,000 and total right retained is 1,96,859. So gain on right transferred is equivalent to 150 minus 96,589. So if I total the debits and credits, it turns out to be equivalent to total debits equal credits for an amount of Total debits equal 386 plus 7 lakh equivalent to 53410 plus 432947 plus 6 lakh 1086. Total debits are equaling the credit. So hope it is clear in all the three situations when the sales price is equivalent to the fair value, when the sales price is lower than the fair value, when the sales price is higher than the fair value. When sales price is equivalent to the fair value, there is no problem. Whatever is the lease liability is the lease liability we include as part of the balance sheet. But if the fair value is below the market terms, the difference in lease liability we are yet to pay and the total we are supposed to pay, we are yet to pay is 432, but total we have paid is 432 plus 50. This 50 is considered as an advance repayment against the lease liability. So this total value of 482 is the amount we are paying to retain the right. So we use this as a fraction to know the right retained and the right of gain transferred. In third situation, when the fair value of the building is lesser than the sales price, sales is at a higher value, why would someone agree to pay a higher amount? Only when they are giving us additional financing. When they are giving us additional financing, we'll exclude this 50,000 out of the total lease liability. Though the total lease liability is turning out to be 526. Now we'll do opposite of what we did in low market terms. This is above market terms. So total liability is 526, but out of this, to retain the right is less 50,000. To retain the right is 476. So we'll use this for calculating the fraction for right of use and gain on rights transfer. So we simply need to be careful about how much we are liable to pay to retain the right of use. So in the first scenario, we are liable to pay to retain the right of use when it is below market terms. Our liability to retain the right of use is equivalent to 482. Though we consider 50,000 as an advance repayment, but this is our liability to retain the right of use. When it is above market terms, our liability to retain the right of use is only 476. This has an additional 50,000, but that additional 50,000 is additional financing. So we'll not consider it as a liability towards retaining the right of use. So we need to be careful about knowing this amount, because this is the amount which is used for calculating the right of use retained in the fraction in comparison to fair value of the asset and what is the carrying amount of the asset, and how much of the right we have, how much of the gain we have retained, how much of the gain we have transferred will be in relation to the value of the liability which we agree to pay to retain these rights. Hope this is clear. Hello. Sale and leaseback transactions are clear. Hope Nitika, Manoj, Banu. I tried to be very explanatory though. Any doubt? Hema?
No, not the moment.
Okay. Manoj, Nitika, Hema.
I just joined, so we'll be seeing the class entirely.
Okay. So there's the last thing which is left for IFRS 16 leases is, what if we sublease? That we have entered into a leasing arrangement. Now, as I said, we are lessee in this scenario, and if we are lessee in this scenario, there is no concept of operating and finance now. We have the rights of use. But what if you sublease this asset? What if the entity subleases this asset? So when we are in the capacity of subleases, we are actually turning into a lessor. Turning into a lessor. So whatever the arrangement, now was alpha is the lessee. Alpha entered into a leasing arrangement with beta. Alpha is a lessee, entered into a leasing arrangement with beta. Beta was the lessor. Lessor will record normal financing or operating, depending on whatever the situation. Beta is the owner, alpha is the lessee, entered into leasing arrangement, we recorded right of use into a books. Now alpha wishes to sublease. Alpha wishes to sublease to gamma. So what is alpha trying to be? When an entity subleases, they are turning into a lesser. So alpha in the sublease is a lesser and will have to show either an operating lease or a finance lease, depending on arrangement with gamma. What will gamma do? Gamma is entering into leasing arrangement with alpha. Gamma doesn't know whether from where alpha has got this asset. For gamma, it is simply a right of use. So gamma will record ROU, rights of use received from alpha. So suddenly the rule changes that we were a lessee, now we are a lesser to someone else if we sublease an arrangement. So this is all for IFRS 16 leases. If you have any queries, any concerns, please ask, or you can get back to me later when you go through this chapter. So this is all for IFRS 16 leases.